what do you see as the primary risk to a soft landing now? Is it still viable to say a soft landing is possible in this environment? The Fed surely thinks so.
I think everything is very much up in the air. And even though, previously we were data dependent and the same situation continues, I do think that we often have to go through the narrative of a soft landing before a hard landing is realized. But what I do want to say is data is still very, very mixed. I think payrolls, a downtrend there is very clear cut. Inflation is moving towards that 2% target for the US, but there is still a risk over the next couple of months that data turns very significantly. We know that economic data operates with quite a significant lag. So it's really all up in the air over the next few months. And then it's a question of, well, how behind the curve are the Fed? I think the fact that they went with 50 basis points at the start of the rate cutting cycle is quite indicative of their concerns about the US economy in the medium term.
Right. So what does that mean for the investment outlook? I always like to ask you every time you come on, Mehvish, how you're allocating in this environment. Healthy overweight to both US and emerging markets now from the house view. What gives you confidence in these regions relative to Europe and Pacific equities where you're a little more downbeat?
Yeah, so if we think about our overall equity exposure, we are overweight, but we are a lot less overweight than we were at the beginning of this year. And in addition to that overweight, we have a much larger overweight to cash and gold. So I think the defensive allocations are dominating the portfolio rather than that equity overweight. Now, splitting it down into regions, what do we have? So yes, we are overweight US and emerging markets, and that's very much driven by sentiment, positive earnings and expectations of earnings and sales in both of those regions versus Europe and the Asia Pacific. We are very conscious of the fact that valuation is unattractive in the US. It's more attractive in emerging markets, but it is unattractive in the US at the moment. But having said that, all of our other variables when it comes to macro sentiment, they're all pointing a little bit more positive. I would like to also caveat that our process changes on a month-to-month basis. So we've really got to look at the trend over the last couple of months, and that trend has very clearly been one of reducing our equity overweight. So we're still holding on. We still have some allocation to equities, but it is a lot less than it was. And the defensive positioning in the portfolio is now more than the equity overweight.